doing today? It's been profitable. How are you doing? Can you hear me, please? I'd like to see your comments. If you can hear me, please drop a comment. Good morning, good morning, good morning, Mr. Joseph. How are you doing? So, we're not going to spend much time today, as we are not going to spend much time today. Since Monday, the price movement has been very slow, and that's because of CPI data that will be released today. Price has been in a range on most of the USD pairs. So today by 1:30 core CPI will be released, and we should expect spike on USD pairs. Considering how price has been moving since the open of the market this week, we should expect spike. As you can see on the chart, there are a lot of traps on the chart. We have buy side liquidity, we have sell side liquidity, and I'm sure they're going to hunt for those levels. They are going to go for those levels. What is it you can't connect? What do you mean you can't connect, Mr. Peps? I am seeing your comments. What do you mean you can't connect? What do you mean you can't connect? I can see your comments. Okay, so we should expect spike. If you're going to trade USD pairs today, please ensure you apply good risk and money management. Ensure you apply stop loss. I would advise that you wait for the data to be released before you trade USD pairs. Wait for the data to be released by 1:30. You should be considering executing your trade maybe by 2 or 2:30, or preferably 3 p.m. That is my advice. If you see a good setup after the news is released, you can go ahead and execute. Okay, but before the news is released, please stay out. Stay out, stay out, stay out. Okay, just wait for the news to be released before you execute on USD pairs. Okay, so that's my take. So let's go to the chart. If there's any pair you want us to look at, please drop it in the comment section. Please, if there's any pair you want me to analyze, drop it in the comment section. So since Monday, I've only executed one trade, just one trade, which is Australian dollar USD, and it's been ranging since Monday. You can see at the moment is in negative. The trade is in negative. Okay, I'm hoping that the news will favor the trade. Okay, but if it doesn't favor it, I have my stop in place. So if it goes against me, I'm fine. I'm fine. I've already decided how much I want to lose on that trade, so I'm okay. No need for panic. Okay, so let's start with gold. Gold, I told you guys yesterday. Good morning, I'm Mr. Amuda. Good morning, Ifeanyi. Good morning. Thanks for joining. I told you guys was it on Monday or yesterday? My expectations on gold. I told you guys there's a high probability they would want to clear liquidity residing at these highs. You can see there are a lot of stop losses residing at these highs. You can see a lot of stop losses, and I told you guys there's a high probability they will go for those stop losses. Okay, this is an area of liquidity, and I think that has played out today. They've tested that level, but I'm sure they're going to push price above that level because there are still stop losses residing above these highs. Okay, so I wouldn't advise that you buy gold from the current market price. You can see where price started going up. Since market opened on Monday, gold has been bullish, so you cannot be buying at the current market price. This would have been the best entry after the close of this armor. That would have been the best entry for gold. Entering gold, buying gold from the current market price is at a higher risk. If you are comfortable taking such risk, then you can go ahead. But personally, I can't I can't buy gold. Okay, gold has already moved, so I'm looking for sell opportunities. Like I told you guys on Monday that my weekly bias for gold is bearish, but I want to see them clear liquidity. I want liquidity cleared first before I'll go bearish on gold. So after liquidity has been cleared, I look out for a bearish reversal pattern to form on 4-hour or 1-hour time frame before going bearish on gold. Okay, I'm still bearish on gold this week, so I've missed the buy opportunity. I have to wait for the sell opportunity. I hope that is clear. So that's my take on gold. Congratulations to those of you who bought gold on Monday. Congrats. I believe you've made some good profits on gold. Okay, let's move to the next pair. Australian dollar USD. Like I told you guys, I have a trade on Australian dollar USD, and technically, you would agree with me that Australian dollar USD is bullish technically, because if you look at how yesterday candle closed as a spinning bottom. You can see it closed as a spinning bottom, and if you go back here, you would see I identified a fair value gap. Can you see that fair value gap? I identified a fair value gap. That fair value gap was created at this point. Can you see this fair value gap? Price has already, it has not filled it completely. Okay, so price is inside that gap, tested that gap, and you can see there is a strong rejection from that gap. And yesterday candle closed as a spinning bottom, and after the close of yesterday candle, let's go down to 4 hour. If we are able to identify a bullish reversal pattern on 4 hour, then we should be considering buying um, Australian dollar USD. So let's go to 4 hour. Let's see the pattern. So you can see the pattern we had on 4 hour. You can see on 4 hour, Australian dollar USD has been in a range from this point to this point. This is the high of the range, and this is the low of the range. So Australian dollar USD has been, it's been bullish. Sorry, it's been ranging, right? It's been in a range. So my expectation on Australian dollar USD, I want to see price fill this gap, this fair value gap here. That's my expectation. That's my expectation on Australian dollar USD. Before going bearish, my bias on Australian dollar USD this week is bearish. But I want to see price fill this fair value gap. You can see this gap. That's my expectation. Okay, that's my expectation. So I'm hoping that when the news gets released, when the news is released, there will be a spike to this side, okay, to fill this gap to the upside. There will be a spike to the upside. Also, you would agree with me that most retail traders would have executed sell, okay, after the formation of this candle here. We also had a breakout here. We also had a breakout here. So a lot of retail traders would have executed sell, and their stop losses will be residing at these highs. So there's a high probability they want to clear all the stop losses, even if they don't push price up to this level to fill this fair value gap. There's a high probability they would come clear liquidity residing at these previous highs before going bearish. Okay, now if they don't fill this fair value gap, you can see this fair value gap is a very big fair value gap, right? The gap is big. So we could expect price to fill 50% of this fair value gap, which will be what's it called? Consequent encroachment. Okay, consequent encroachment. So 50%. So my tip in now, if price could get to this level, this is where I'm going to exit this trade. That's 6708. That's about 45 to 50 pips. 50 pips. That's where I'm going to 50 pips. My profit target is 50 pips. The risk on this trade is I think about 30 pips. So I will just go for 50 pips. Okay, so that's my target on Australian dollar USD. So my bias on Australian dollar USD is bearish. If price breaks this low or this support, then we should expect more bearish move on Australian dollar USD. You can see where I have my SL. My SL is at this level. Can you see that? So let's see how it plays out. So that's my take on Australian dollar USD for the week. I'm still bearish, but short term, I'm bullish on Australian dollar USD. I hope that is clear. Which other pair do you want us to look at? Let me know in the comment section. If there's any other pair you want us to look at, let me know in the comment section. Let me know in the comment section. If you're also getting value from the live stream, please give it a thumbs up. Give it a thumbs up. Okay, let's look at GBP USD. My bias on GBP USD still remains bullish. Okay, so let's start with the daily. So you can see also yesterday candle on GBP USD closed as a bullish spinning bottom, a bullish spinning bottom, and you can see since market opened today, it's been bullish. You can see that it's been bullish. So after the formation of the spinning bottom, let's go to on 4 hour. Let's see the pattern we have on 4 hour. So you can see on 4 hour, it's been in a range, kind of, it's been in a range. But one thing you should notice here is this: at this point, price came down, created a resistance level. At this point, price went up, created a support level, okay, and the first candle for the day, yeah, this is the first candle for today's market, closed above this resistance. It closed above this resistance, which indicates there is more demand than supply, right? There is more demand than supply. And currently, now after the formation of this bullish candle, a bearish candle formed, and you can see the market is still trading above the resistance that was created at this point. So at the moment, GBP USD is bullish technically. Technically, GBP USD is bullish. If you are buying GBP USD, you can see we have a fair value gap here. Also, this level is an area of liquidity. Then we have a fair value gap here. So there's a high probability they would fill this gap before going bearish on GU. That's my take on GU, okay? So GU at the moment is bullish. If you are buying GU, your stop loss should be the low of this candle. Your stop loss should be the low of this candle, and your TP, you can set your TP at this level. Calculate the risk reward. If it makes sense, you can go ahead and execute the trade on GBP USD. Buy, okay? So if you are buying, let's assume you're buying from this point, your stop loss is at this point. This is 3096, 3096, 3046. That's about 9646. That's about 50 pips. And your TP, say your TP is at this level, 3159, 3096, 3159. That's about 60 something pips. The risk reward does not make sense. It does not make sense. You're risking close to 40 pips. Okay, so in such case you can risk less. Okay, risk less in such case. If the risk reward does not make sense, you can reduce your lot size, reduce your risk on such trades. Are you getting me? So that's my take on GU. I am bullish on GU for today's market. I hope that is clear. I hope that is clear. I hope that is clear. Okay, let's look at one or two more pairs, then we end today's session. Like I said earlier, there isn't much to talk about today. There isn't much. Which other pair? Which other pair? Okay, let's see USD card. Okay, I'm expecting a bearish move on USD card. I told you guys yesterday, liquidity will be cleared. Liquidity residing at this previous high will be cleared, and that happened yesterday. You can see this candle was used to clear liquidity residing at this previous high. That has been achieved, and you can see the pattern we have here on USD card. This is a bearish reversal pattern. This is a spinning top, a bearish spinning top. So at the moment, GBP USD card is what? Bearish. Let's start with the day. Let's see how yesterday candle. Okay, yesterday candle closed strongly bullish. You would also notice that price tested this resistance level. You can see this resistance level. Can you see this resistance level? Can you see? So price tested that level. I think the candle even closed a little pips, few pips above that level. So this is the resistance zone. And you can see what is playing out at that resistance area. Can you see that? There's a strong rejection from that area, and the pattern that formed on 4 hour, as you can see, we now have a bearish reversal pattern on 4 hour time frame, which confirms change in trend from bullish to bearish. So my bias on USD card at the moment technically is sell. It is sell, and there's a high probability, as you can see, a fair value gap was created at this point. So they might want to come and fill this gap, okay, before going bullish. Also, a lot of retail traders would have executed buy after this breakout, right? After this breakout, a lot of retail traders would have executed buy, and where would they have their stop loss? Stop losses will be residing at this low, or a few pips below this low. So there's a high they would come clear liquidity residing at this low and also fill this fair value gap before going bullish. Okay, so that's my take on USD card. My bias for USD card is bearish. Now let's look at one of the JPY pairs before we end this session. One of the JPY pairs. I believe you all can hear me. I believe you all can hear me. Okay, let's look at GJ. Okay, GJ. Let's start with the daily. So daily, yesterday candle closed strongly bearish. So based on how yesterday candle closed, GJ is still bearish. Okay, GJ is still bearish. GJ is still bearish, but you cannot sell GJ at the current market price. You cannot. Price has already moved. Don't take the risk. Personally, I can't take this trade. I can't buy GJ at the sell GJ at the current market price. This is where price started dropping. This is where it started going bearish. So why should I sell at this? Okay, I'd rather look for a buy opportunity than sell on. So if a bullish reversal pattern forms on 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 if a bullish reversal pattern forms on GJ, you can buy. Okay, you can buy. If a bullish reversal pattern forms on GJ, you can buy. I hope that is clear. So someone said we should look at Euro USD. Okay, so that will be the last pair we'll be looking at. So you can see Euro USD also is bullish at the moment. You can see how yesterday candle closed. It looks like an inverted hammer, though not a valid inverted hammer. It looks like an inverted hammer, bearish inverted hammer, and after the close of a bearish inverted hammer, you have to wait for the next candle to close bullish. So if today's candle closes bullish, we should expect more buys on Euro USD tomorrow. If today's candle closes bullish, we should expect more buys on Euro USD tomorrow. Okay, as you can see here, we have a fair value gap here, and that could be the reason for the pullback. Okay, this fair value gap that was created here, so it's likely they want to fill this gap before going bearish. Okay, it's likely they want to fill this gap before going bearish. But let's see how the last 4 hour candle closed yesterday. Let's see. Let's go to 4 hour. So you can see on 4 hour here, you can see we have, this is a bullish reversal pattern, right? This is a bullish reversal pattern. We had a spinning bottom here. Then also here we had a bullish spinning bottom. This is the confirmation to buy. After the formation of the spinning bottom, wait for the next candle to close bullish. And this next spinning bottom close bullish. This is where one would have entered buy. After the close of this candle, you would have bought from this point. Your stop loss few pips below this low, and at the moment you will be in profit. You will be in profit. And this next candle engulfed these three candles. You can see this candle. This is an engulfing candle. It engulfed this, and this candle closed above the highs of these three candles. This is a strong indication that we have more buys than sells in the markets. So at the moment, Euro USD is bullish. So if you are entering now, it is late. It will be late entry, but the risk is still worth taking. The risk is worth taking. So you're buying, let's say you buy from this point, 1.1048, and your stop loss is, let's say, 1.1013. That's about 30 pips, or yeah, 30 something pips. If you set your TP at this point, let's see, 110, that's about 50 pips. That's about 50 pips. So risking 30 pips for 50 pips is still a good risk reward. It's still a good risk reward. Money no year. It's still a good risk reward. Okay, so that's it. That's it. Any other question? Do you have any other question? That will be all for today's session. Maybe a few minutes before CPI, I would come on. A few minutes before CPI, I will come on. So let's just see how the market reacts to the data release. Okay. So just ensure you're subscribed to the channel so that when I come on, I might not drop a message on the WhatsApp group or social platforms. So ensure you are subscribed to the channel so that once I come on live, you get notified by YouTube. Okay. So that will be all for today's session. If there are no questions, any question, any question, any question, Mr. Peps, Mr. Ismail, who else is on this live stream? Who else? Who else? Ifeanyi. Oh, yeah, any question? Any question? All right. It appears there are no questions. So that will be all for today's session. I really appreciate you guys for always joining the live stream. I appreciate you guys, and my greatest desire is that you all prosper in trading. That's my greatest desire. That's why I show up every day. Okay, it's my greatest desire. But you just have to apply the right principles. Don't rush the market. Take it easy on yourself. Okay, take it easy on yourself. Like I always tell you guys, if you rush, you will crash. Okay, if you rush, you will crash. I've been there. I've tried several techniques. Trying to rush the market is a very wrong way. Wrong way. If you're rushing the market, you're destined for failure. you're destined for failure. You have programmed yourself for failure if you're trying to rush the market. So please, slow and steady, please. Slow and steady wins in this game. Slow and steady wins in this game. All right, guys. See you guys later.